I'm Danny Moses, and this is The Danny Moses Show. In this episode, why should you care about the United States national debt? I'll tell you. And my fellow Big Short partners, Porter Collins and Vincent Daniel, join the show to talk about the past, the present, and what lies ahead for the markets. Plus, I'll give you ways to trade some of the topics I'm discussing in the form of Kalshi event contracts.
Over 30 years of beating Wall Street, predicting the famous Big Short. Now, he's here for you. This is The Danny Moses Show.
Welcome to the inaugural episode of The Danny Moses Show. Every week, we will talk about and help make sense of the most important and impactful events happening in the markets, and I will do my best to break it down for you in a way that both informs and entertains. That's what you can expect here on Scripps News. Let's start with what's on my mind and why it matters. The U.S. national debt is approaching $39 trillion. That's up from around $9 trillion where it was in 2007, just before the Great Financial Crisis. With unprecedented stimulus and spending from the Federal Reserve and U.S. Treasury over the last 18 years, which includes the pandemic, we find ourselves in uncharted territory. While there is no doubt that both the financial crisis and pandemic required the government to step in and provide financial support, we have yet to get our house in order, and we continue to run annual deficits of just under $2 trillion. The problem here is that it is very difficult to balance the books of the United States for the following reasons. We spent roughly $7 trillion our last fiscal year, which ended in September 2025, and the majority of that spend is mandatory. It includes the interest we pay on our debt, which was over $1 trillion last year alone. This is why you hear so much about the need to cut rates and keep our bond yields low to try and minimize this expense. The other large pockets of expenses come from Social Security at around $1.6 trillion, Medicare around $1 trillion, and defense spending of over $800 billion, which will be difficult to cut as well. Let's get back to the overall debt picture. There are certain mechanisms in place that are supposed to act as a guardrail to keep things in check, such as the debt ceiling, but that has been used as a political pawn by both parties over the last several years. Not raising it would mean a drastic cut to government spending coupled with higher taxes to help balance our budget. To put the debt ceiling in perspective, it currently sits at just over $41 trillion, which was raised from just over $36 trillion in July of 2025. That's after having been suspended in June of 2023. Here's the thing to focus on. Based on current government deficit trends, we will need to adjust the debt ceiling higher once again at some point in 2027. We are also dependent on other countries such as Japan, China, and the UK to continue holding and buying our debt. Over $9 trillion of our debt is held by foreign countries, and Japan alone owns around $1.2 trillion of our treasuries, and they have their own issues to address. That is something to think about, as foreign policy can have a direct impact on our finances at home. We need to give the world an excuse to keep buying our paper. But what does all this mean for you? Are your Social Security and Medicare benefits at risk? This is one of the reasons you should care. While there is hope we can grow our GDP and economy enough to reduce our deficit, there are no quick fixes. And by cutting rates to try to both lower our interest payments and stimulate the economy, we risk increasing inflation and our cost of living. So that's the picture right now. Growing debt, we need other countries to help fund it, mandatory spending is mandatory, and there's one more technicality here I want you to focus on. The rating agencies, yes, the same ones that were late to recognize the subprime crisis. S&P, Moody's, and Fitch have already downgraded the United States rating from AAA rating, with Moody's being the last to lower the rating to AA1 in May of 2025. They cited escalating debt and spending concerns as reasons for the downgrade. Moody's did provide a stable outlook, partly predicated on the ability for the Federal Reserve to maintain its independence and the U.S. dollar's role as a global reserve currency. Along with the debt ceiling, these agencies provide another guardrail, or report card if you will, in monitoring and detailing our financial health. While investors can choose to ignore these downgrades as simply symbolic because the U.S. and the U.S. dollar are still the driving forces in the global economy, we are beginning to see moves in certain assets that bear watching. From the strength in gold to the weakness we are seeing in the U.S. dollar, the markets are trying to tell us something. All right, the table is set for the conversation ahead, and it will be a good one. Porter Collins and Vincent Daniel, my boys from The Big Short, are next.
The Danny Moses Show is sponsored by Kalshi.
Welcome back. This is The Danny Moses Show, where we simplify what's driving our economy and markets. I am thrilled to have my former partners from The Big Short, Porter Collins and Vincent Daniel, join me. Guys, thanks for coming on the show, and I couldn't think of better guests to have on the inaugural episode. And as a way of background, I met Vinny in the late 90s when we both worked at the brokerage firm Oppenheimer, where I was a salesman and Vinny was an analyst working for Steve Eisman, who was portrayed by Steve Carell in The Big Short, by the way. And I met Porter when he was working for Steve at a hedge fund in the early 2000s. Steve then brought us all together, and the rest is history. Vinny, I want to start with you. Your road to Wall Street started as a kid from Queens, and I also thought Jeremy Strong portrayed you accurately in the movie. When did you realize you had such a passion for the markets and wanted to make it a career?
Well, first off, Danny, thanks for having us. This is fantastic, and it's so we're so proud of you that you're doing this. This is incredible, and it'll be great for all people that listen to you. It's going to be awesome. Just in terms of me, where my passion came from, there was a great scene in Ozark where, if you know the show Ozark on HBO, where Ruth Langmore meets up with the rapper Killer Mike in a diner, right? And she's about to, I forget, she's about to or was going to whack the guys who killed her cousin. And she was listening to a rapper called Nas, who came from Queens. And they talked about Manhattan and looking at Manhattan across the river and what you saw. So as a kid growing up in Queens, you always knew there was something different over the river in Manhattan. And that's where the money was. And that's where the excitement was. For me, it really came from my mother, right, who worked at a commodities brokerage firm. She was an accounts payable clerk. And I remember going to a corporate picnic. And the people there were just different than what I was used to. They weren't like the people that came to my holiday parties or my New Year's Eve parties. They were just different. And it got me excited from day one that that's where I need to go to. And that's really where it came from for me.
That's amazing. The only thing that I would note there is, just because there is a big bidding war between Netflix and Warner Brothers, is that I believe Ozark was on Netflix, not HBO. So when they claim that property, that might come up in the merger. So Vinny, thanks for that. All right, Porter, on to you here. A little bit different upbringing. You were training to be a two-time Olympic rower while Vinny was playing handball in Queens. What turned you onto the markets, and what still drives you, I guess, today?
Well, Danny, great to be here. You know, as you pointed out, I was an Olympic rower, and you know, unlike the NIL money of football these days, there is no money in rowing, and so I knew I had to channel my competitive spirits somewhere else, and look no further than the capital markets and stock market. And to this day, you know, I still love the challenge and love the competitive nature of markets, and you know, I hope to be doing this into my late 90s. So that's the game plan.
All right, I talked in the first segment about our growing national debt. President Trump was asked in Davos this week about that. I want to play a little clip of what he said.
The U.S. debt is high, is now the biggest expenditure on your budget. How to get out of that impasse?
Well, the big thing is growth. I mean, growth is the way. If we grow like this, we go from having a $37 trillion. We go from having high debt to low debt. But we also are cutting expenses, you know, the old-fashioned way. We have extraordinary growth. I think we're going to be growing our way out. I think we're going to be paying off debt. We're taking in tremendous money from tariffs fairly. And again, I'm using them judiciously. You know, Switzerland's a case study. I could have gotten much more. I could have asked for much more. But we're using them judiciously. But I think growth, most importantly, and then cutting costs.
Okay, my reaction to that is the debt's not 36 or 37, but what's a trillion here or there? It's approaching 39 trillion. Yes, we can stimulate growth, but I don't think we're going to be cutting much of the $1.8 trillion deficit, which I mentioned, which occurred last year. And so some of these policies, yes, can help, but when you're cutting taxes and so forth, I just don't see how this is going to happen. So guys, Vinny, I'll start with you. How do we manage this, and is it ever going to matter?
Well, the way I think about it is we are managing it, but we are managing in a way that most people don't see, right, Danny? And what we're doing is debasing the currency. And in many respects, so as the debt grows, we always ask ourselves the question, who in the world is going to buy this debt at the prices we need to buy it in order for us to continue to thrive? And whether we find real tangible buyers, let's say insurance companies or savers, or we don't, we're going to get it done by hook or crook. And the way we're going to get it done is by either printing money, and they'll use some fancy terms like quantitative easing or a bunch of acronyms to explain what we're doing, or allow people, which we are doing, to lever themselves and buy treasuries and earn a small spread. Either way, the way we look at it, to keep it simple, is that they will continue to debase the currency so that we can continue to enjoy this fiscal largesse. And we'll probably get into that discussion in a bit, but all roads to us lead to gold as a result of what we're seeing.
All right, you stole my thunder for Porter, which I'm sure he's going to mention. So Porter, why don't you weigh in on kind of the national debt and what we can do about it, if anything?
Well, Trump is right in the fact that we need to grow ourselves out of it. Where he's wrong is that we're not going to pay off debt, right? And I think in 2023 we wrote our annual letter about how the national debt is going to approach 40 trillion in a couple of years, and lo and behold, a couple of years later, here we are, right? And so that pace is not slowing down, and just the aggregate sheer size of the debt growing is a problem. And I think that whether that debt's going to be 40, 50, 60 trillion, it's not going to go down, and obviously the interest costs just compound upon that. So that's the way I see it. And listen, I want us to grow out of it, but we're going to need a lot more growth to really debase the debt out. So,
all right, other topics out there that are moving markets: Federal Reserve independence and tariffs. So the Supreme Court is going to have a hand in both of those topics. It heard the Lisa Cook firing case. The justices seem prepared to protect her, and it'll decide whether these tariffs from the president are constitutional. So question for you, Vinny. I know how we both feel about the Fed, how they handled the GFC, all the quantitative easing that needed to take place, I guess. What do you think about the independence of the Fed, and how important is it to the markets?
Oh, I'm sorry, I'm laughing as you're asking the question, because first you have to start with my view is that I never believed the Fed was ever independent. And we would argue, not with each other, but against other people all day long about the Fed's supposed independence. To me, it's a false facade to separate the spending function, which occurs in Congress, with the money printer. But to the masses, this false facade is important, so there is a risk that President Trump upsets the apple cart. And then anyone is going to upset the apple cart, as we've seen, it's going to be him. To me, the funny thing is he also wants to appoint, so he has the ability this year to appoint a new chairman of the Fed. And I know it gets a little murky as to exactly how it's going to happen, but we will, more likely than not, have a new chairman of the Fed by, I believe, May or at least the summer. I forget the exact date.
It'll be the end of May, June. So June is when the new Fed chair comes in. Yeah.
And in speeches that he has given, he has asked or suggested that whoever the new chairman is continue to lower interest rates, even if the economy continues to percolate, which is kind of unprecedented, right? That's not usually the rules of engagement for the Federal Reserve. So again, that's President Trump upsetting the apple cart. And we joke around that there's so many reasons why we keep coming back to owning stores of value and things that are tangible and things that they can't print with fiat money. And it leads to things such as gold and silver and commodities. But when you start hearing this stuff, this is how we continue to revert back to the investments that we're making today.
All right, Porter, we just mentioned the tariff, kind of the rhetoric, the implementation. It's been going on for almost a year. What do you make of it? I know we talk sometimes during the day about the markets as they're moving and pretty much buy every tariff scare, I guess, but how are you navigating that?
Well, I mean, as Vinny touched on here, one of the biggest themes in our portfolio we've been talking about is gold. And this is where it gets a bit complicated, and our background in the financial system really helped us understand what's going on. And foreign central banks around the world own a lot of dollars because it's the reserve currency of the world, right? And the thing is, they actually don't own dollars. What they own is a lot of U.S. Government debt or treasuries. And this has really worked over the last 40 years. But recently, central banks like China have started to wonder, do I need to own all this debt, right? And the subtle shift that they've made, and other central banks have made, they've decided to own an asset rather than a liability or debt. And so, for centuries, gold has been the bedrock of the financial system. And so this is sort of a slight shift and a return to what's worked over centuries. And so, that subtle shift has caused a doubling of the gold price recently. And so, we think that this will continue. And we think this is not a 1 or 2 year trade. We think this is a trade for multiple years. And so, most Americans don't own a lot of gold. They've owned the stock market, and that's been the thing to own for the last, 40 years again. But if you really look under the hood, gold's actually had a better performance than the S&P since 2000. And so we're happy to own it, and that's a big focus of what we're doing.
Yeah, I think for those people out there that aren't tracking, gold's around a $35 trillion asset at this point, if you want to add it up, and maybe even more at that point. So I guess the question, Porter, is what happens if rates start to rise as a result of the U.S.'s inability to manage its debt? I mean, that's really for both of you, but Porter, I know gold's going to go up on that, obviously, but that to me is the scary moment, right? And I opened in this episode, about that, just the debt in general, and if, to Vinny's point, if the Fed tries to lower rates in the face of inflation, and people read into that, you could see rates going higher. So I guess that just adds to your gold thesis there as well.
Well, that is the scary moment. What happens if rates do up? Obviously, the interest expense on $40 trillion goes up a lot if rates go up a lot. And so you have to ask yourself, is it of national, defense importance, national importance of the whole United States to keep this debt cost low and or rates low? And I would say yes. And you've seen this historically. The Fed's issuing a lot of 2-year notes, not 10-year, because it's a lower rate, right? And Yellen did it, and Bessent's doing it now. So it's bipartisan, right? And it's bipartisan. It's of national importance and security to keep rates low.
All right, guys, well, we're not managing money together any longer. We reunited last August and launched What Are We Doing? Contrarians at the Gate on Substack. It's been a ton of fun. Vinny's our resident writer. Look out, Michael Lewis. Vin, talk about some of the topics we've been covering. And then, Porter, I want to get your thoughts on, we do a weekly podcast called The Friday Night Dirty, and how we come up with some of that subject. So, Vinny, close us out here.
Well, a lot of the writing subjects are what we're seeing in the markets on a daily or weekly basis. And for us and for me, whatever pops in my head, which reminds me of some pop culture theme that brings about, it's like, well, why in the world shouldn't I write about this? Like recently, we just talked about our process that we use during earnings season. I think it's an interesting way of writing our thoughts and minds to our subscribers. And also explaining what we're doing and how we're doing it, along with the network, the community that we've built, discussing ideas. It reminds me a lot of the older sell-side days, or even the older days in media such as Twitter, where sharing of ideas and concepts and thoughts can be done by like-minded individuals. And that's what excites me about what we just built.
And Porter, you were the one that was hard to kind of convince to do it, but I think you're enjoying it, no?
Well, the question is whether you want a public or private persona, and
well, you're public now, so here you go.
Exactly. Well, the thing for us is more about teaching, right? And we're not trying to give ideas of saying buy this now. We're trying to help people with their own financial freedom so they can make their own decisions. And when they see a headline come out and they say, what does that mean to the stocks I own? Right, and how this interconnected world, and how can I profit off it, and how can I save, and how can I be a better steward of my family's capital? That's the thing that we think about, the things that we think about, and so we're just trying to help people along that journey.
All right, Vinny and Porter, thanks so much for coming on the show. There would certainly not even be the Danny Moses Show if we had never met, so I hope you guys will come back on in the near future.
Thanks for having us, Danny.
Thanks for having us, Danny.
Next, prediction markets are all the rage. You can trade on anything these days, from who will be the next Fed chair to who will win the Super Bowl. My Kalshi picks of the week are next.
The Danny Moses Show is sponsored by Kalshi.
Welcome back to the Danny Moses Show. In the opening, I talked about the U.S. debt and the rating agencies as well. Well, wouldn't you know it? Kalshi has an event contract for that. Will either Moody's, S&P, or Fitch lower their current credit rating on the U.S. in 2026? As we sit here today, the odds are roughly 40% or 40 cents. I think those odds are about correct. And given the current outlook and the fact that it's only January, you might consider taking a shot at yes. And for those unfamiliar with prediction markets and have never traded them, you can choose either the yes or no response to the event being proposed, which results in $1 payout if it's yes and 0 if it's no, if the event fails to happen. For example, if you chose yes to the contract I just mentioned and the event happened, the downgrade to the US credit rating, your 40% or 40 cents would turn into $1 or 100%. The thing about these event contracts, though, is that you have the ability to trade them around the clock so you can take advantage of the news and volatility. Gold also came up in this episode a few times. And while this may be the first time many of you are hearing me speak, I've been talking about the gold trade for years. And I prefer it to Bitcoin as a way to express concern about the stability of fiat currencies around the globe. While I respect and understand the argument to be long Bitcoin, I prefer a hard currency like gold, which has stood the test of time. In this Kalshi contract, will Bitcoin outperform gold in 2026? Well, gold's already off to a big head start this year, and I don't see much slowing it down. This event contract has been moving since I started tracking it earlier this week, but I still think it might be worth choosing no, even down here at 30 cents or 30%. These picks are not financial advice, but if you want to learn more, go onto the Kalshi website to read the rules and use promo code MOSES for a bonus when you open an account. Again, these are just my opinions. I'm not telling you what to trade or offering any investment advice. When we come back, my closing thoughts. Thanks again to Porter and Vinny. I hope you got something out of this episode that helps you understand what's happening in the economy and driving the markets. I will be back with you next week for another episode of The Danny Moses Show. And have you seen your power bill recently? The great Cameron Dawson, Chief Investment Officer of New Edge Wealth, will join me and give us her thoughts on the markets and where she sees both risks and opportunities. In the meantime, you can follow me on various social channels, including on Substack, where me and my fellow Big Short partners, Porter and Vinny, banner even more than what you just saw. We call it What Are We Doing? Contrarians at the Gate. And you can watch The Danny Moses Show anytime on Scripps News by going to scrippsnews.com/Danny Moses. So until then, I will keep an eye out in the markets for what everyone is talking about, what nobody is talking about, and what I think matters most to you. I'm Danny Moses.